Ladies and gentlemen, Panda Trader here. Welcome back to the channel. Today we are not looking at one single session. We are building a complete game plan for the week ahead. In this video, we will review what happened last week. We will look at where liquidity is sitting right now, and we will build a full trading plan using the weekly chart, the daily chart, the 4-hour chart, and the 1-hour chart. Gold is trading currently around $4,376.82. Let's break it on down step by step. Right now, gold is sitting inside a recovery move after a large expansion move and then a deep pullback. Price has been climbing back over the last few weeks, so we are not in a flat range. We are in a recovery phase, and the big question this week is whether that recovery continues or whether price is just correcting before another move down. Let's go time frame by time frame. Looking at the daily chart, price spent last week riding higher. It moved from the low $4,200 area into the low to mid $4,400 area, tagged a high and then pulled back close to the wick near $4,376. So overall, last week was a bullish week. Price spent and pushed into a new short-term high, got rejected and then pulled back a little before the weekend close. The higher time frame from that is still sitting above the current price, which means there is still liquidity resting up there. On the weekly chart, the bigger picture is important to understand. Gold went through a very large expansion move, climbing for months and reaching a major high. After that high, price turned down and spent several weeks correcting, falling on the way back toward the 4,000 areas. Over the last few weekly candles, price has turned back up and now is correcting and recovering off that low. Currently trading near $4,376. This tells us the weekly structure is still technically in a corrective phase after the big high. We have not made a new weekly high yet. What we are seeing right now is a recovery leg inside that larger pull up. So I do not have a clear premium or discount on much on weekly chart. I'm not going to guess one, but what I can say is this: until price closes back above the recent weekly lower highs, the weekly trend is still best described as corrective, even though the short-term momentum is bullish. For next week, this means we should respect the bullish momentum, but stay aware that the bigger weekly structure has not fully flipped yet. Switching to the daily chart gives much a clearer picture. Price fell from a high near 4,900 area down to on the way down to a low near 4,000 in the July area. That was a clean downtrend. Lower highs and lower lows, no ambiguity there. But since that low, price has completely reserved. We can see a steady climb, higher lows and higher highs all the way back to where we are now, near the $4,376. That is a clear bullish shift in the daily structure. So, does the daily chart confirm the weekly bias or does this contradict it? Honestly, it is somewhere in between. The daily chart is clearly bullish right now, higher highs and higher lows all the way up, but the weekly chart has not made a new high yet. It is still technically recovering from a bigger correction. So, what we have here is daily uptrend developing inside a weekly correction. That is an important distinction, and it tells us to respect the daily bullish momentum while also being ready for the possibility that is still a correct bounce or the bigger picture. This is where things get more actionable. On the 4-hour chart, we can see gold build a base, trading sideways, roughly between 4,030 and 4,080 in the late July and early August. From there, price broke out with a strong impulsive move like this, pushing up toward the 4,370 area in the first week of August. After that push, price consolidated for a few candles, then broke out again, this time reaching up toward 4,440. That was the highest point on this 4-hour chart. From there, we saw a pullback. Price dropped back down to around 4,320 and then recovered again to where we are right now, near the $4,376. What does it tell us? The move up from the base was impulsive. That means it was fast and strong, not choppy. The pullbacks along the way have been corrective, meaning they were smaller and slower compared to the moves up. That is a healthy bullish structure. Each time price pullback, buyers step back in, so the 4-hour chart is confirming the bullish shape we saw on the day chart. I do not see a fair value gap or volume profile clear match on this 4-hour chart, so I'm not going to invent one. What I can say with confidence is that structurally, this 4-hour chart is still bullish, and it agrees with the daily trend. Now let's build the actual plan using the 1-hour chart, since this one already has some structure marked on it. Starting from the bottom, there is a clear support marked right here. You can see roughly between 4030 and 4072. Inside that zone, we can see a change of character like this around 4072, followed by a breakup structure near 4112. From there, price built a rising channel labeled as a bullish trend, as you can see, with another change of character inside it, leading into another block sitting around 4232. After that order block, price broke structure again to the upside and rallied all the way up into a zone labeled the Rejection premium zone, sitting between roughly 4430 and 4450. Price got rejected from that zone, pulled back, and printed another change of character around 4318. Right now, price is sitting near 4376 between that change of character level and the premium rejection above. So here's the plan. On the buy side, my areas of interest are an order block near 4233, and if price drops further, the support zone between 4030 and 4072. On the sell side, my area of interest is the premium rejection zone between 4430 and 4450. Since that zone is already caused some rejection, I'm not entering just because price touches this area. I need confirmation, something like a change of character or a breakup structure on a lower time frame before I consider any entry. If price does not give me that confirmation, I simply wait. Given that the daily and the 4-hour charts are both showing the bullish structure, my main scenario this week is this. I want to see price pull back toward the change of character zone at the 4317 area, and maybe it will deeper into the order block near 4232 area, right like this, and show me a bullish confirmation there. If that happens, my target is back up toward the premium rejection zone, roughly between 4450 and 4440. That is my main scenario because the higher time frames agree with each other. The daily is bullish, the 4-hour is bullish, and the 1-hour gives me clear marked areas to work with it. That alignment is what give this scenario the higher probability, not a guess, just structure lining up across time frames. Now, what would change this plan? If price breaks down through the order block near 4232 area, and even deeper to the support zone around 4030, that would invalidate the bullish structure we have been tracking. At that point, I would stop looking for buys and I would start looking for the market to build a bearish structure instead, with lower highs and lower lows on lower time frames. The bias would shift and the whole plan would need to rebuild around selling opportunities instead of buying ones. Let me be clear what about I'm avoiding this week. I will not chase price if it rallies straight into the premium zone without giving me a pullback first. I will not enter in the middle of the range with no clear structure. I will wait for price to reach one of my marked areas, and I will wait for confirmation before doing anything. If price never comes down to my buy zones, and never reaches my sell zone, I simply do not trade. There is no rule that says I have to be in the market every single day. Before I take any trade this week, I'm asking myself a few questions. Is the weekly bias still recover inside a larger correction? Does the daily chart still agree with the bullish structure? Has the 4-hour chart conform with a clean breakup structure? And has the 1-hour chart given me a change of character at my area of interest? And am I trading from one of the liquidity areas we marked, the order block, the support zone, or the premium rejection zone? If I cannot check these boxes, I do not take a trade. A quick reminder before we close out, always wait for confirmation. Never just enter because price is near a level. Always protect your capital and always use a stop loss on every single trade. No analysis, including this one, comes with a guarantee. So this video is for educational purposes only and it is not financial advice. This is my complete trading plan for the week ahead. Trade patiently and let the market come to your levels. And do not force anything. If you enjoy this kind of weekly analysis, go ahead and subscribe to the channel. And I also upload daily 1 hour updates during the week so you can follow the plans as it develops. See you in the next video. Panda Trader signing off.